Good morning friends and welcome to the pre-market view. US markets were mixed. Dow was up about 0.26%, however Nasdaq was down almost about 0.5%. The economic data that US posted were more or less okay, no major surprises there, and even the 10-year bond yields continues to hover around about 2.81. So one will have to see how the next set of data points really come up for a broader direction on the market. However, interestingly, Dow managed to close at its weekly gain for the first time in 2014. European markets too were up about 0.2 to about almost 0.25%. No major data points from Eurozone. And when we look at the Asian markets today morning, Nikkei is down almost about 0.64%. Hang Seng is also down 0.43%. And SGX Nifty is suggesting that we are going to open down with almost about 10 to 12 points kind of a negative tick. Today morning, China also reported GDP data, and the GDP for this recent quarter came in at about 7.7%, which was better than market expectations. But despite that, we are not seeing any uptick in the Asian markets. Talking about the flows, FIs were net buyers in the cash market to the tune of 76 crore. The DIIs were net buyers to the tune of about 145 crore. And in the index futures, we have seen FIs selling to the tune of almost about 245 crore. Friday was a weak session for our own markets. TCS was a major loser, losing almost about 5% after the numbers were not up to the mark. And we had also seen weakness in pockets of technology and most of the other stocks because of the kind of global cues that we are working with. The flows also have dried up quite a bit. On that note, let me invite Sadhna to take us through important F&O cues and ideas that we can have from the F&O side.
Good morning friends, let's have a view on derivatives. On Friday's trade, we have seen that markets continue to trade very volatile but in negative bias ahead of sustained sell-off in sectoral indices as well as results of majority of the companies, due to which markets continue to trade with whipsaws and close the session in negative terrain with a significant loss of more than 1%. In this period, we have seen that long positions were squared up by market participants as around 10.39 lakh shares were reduced in open interest, and Nifty cost of carry decreased by 100% as Nifty spot as well as futures closed at same level at 6261.65. On the options front, PCR has decreased from 1.02 to 0.99, but we have seen that unwinding activity taking place in call option as well as put option, which is clearly visible in the options activity, as we can see 6100 followed by 6200 put option has seen an unwinding activity in open interest front, and call strike of 6200, 6300 and 6400 had seen an unwinding activity in open interest front. Our positional support would be 6170 on closing basis, and intraday support would be 6235, and resistance would be 6270, 6300, and there is no security in ban period today. On Friday's trade, FIs were net sellers of approximately 360 odd crores in future and option segment. Overall, our bias for the market is negative as we are trading below our weekly VWAP of 6350. Our lower range would be 6150 and higher range would be 6350. And on closing basis, 6200 would be very important level to watch on. Thank you.
Here are the important news and events that we are tracking today. First of all, the companies that would be announcing numbers. Asian Paints, we are looking at a net profit of about 381 crore. V-Guard, we are looking at a net profit of about 20.2 crore. And in case of Ultratech Cement, we are looking at a net profit of about 383 crore. Reliance Industries came out with Q3 numbers, and the numbers were not that encouraging. There was a weakness in the refining margins, which was at about $7.6 versus about $9.6 in the previous year, and even in the previous quarter the GRMs were in the range of about $7.8 to $7.9. The revenues were more or less in line with market expectations, in fact slightly below that, and the net profit was higher than the market expectations, mainly because of the higher other income. The rating agency Moody's has said that they are not looking at downgrading the economy, though there is a possibility of the populist measures because of the forthcoming elections. And the government plans to sell about 5% stake in BHEL through a divestment, though earlier they had ruled out such possibility in the current scenario, particularly for the power stocks. Aurobindo Pharma, some positive news as the company has signed an agreement to acquire commercial operations of Dublin-based Actavis in 7 Western European countries. The exact amount of acquisition is not known, but if they do this acquisition, it will have footfall across about 5 to 7 regions in Europe, which could be a big positive trigger for Aurobindo Pharma. TCS has reported that they are looking at launching several reusable software packages as a part of the strategy to adapt to the changing business and technology landscape, and the company is looking at launching this in telecom, financial services and data analytics space. PTC India came out with exceptionally good set of numbers, and there was a threefold increase in its net profit to about 90.78 crore versus about 30 odd crore in the previous quarter. So one can go long on PTC with a stop loss of 56.5 and a target of about 60 rupees. Also, we have rolled out a new alpha delivery pick on Friday, which is CMC. Currently the stock is quoting around 1427 rupees, and we are looking at a target of about 1900 odd level. And the key arguments here are that over the years CMC has gradually transformed itself from a low margin equipment provider to a well diversified IT company with a larger presence of the high margin export business, and this is going to have some kind of a re-rating for the company over the next few quarters. The value-added services augurs well for the margin trajectory of the company, and the CMC management has credibly brought down the low margin equipment revenue to around 10% from almost about 40% earlier, and because of its synergies with TCS, the revenue contribution of the relatively high margin international business has increased significantly to almost about 60%. So we think that these are the positive triggers for it. The recent quarterly numbers were not that impressive, as the revenue was flat on a quarter-on-quarter basis. However, the margins were slightly better at about 16.2%. And more importantly, the stock is quoting at a very reasonable valuation of about 13 times FY15 and about 11 times FY15 earnings, which is considered attractive for a high quality management company like CMC. If you look at the charts, there has been a good uptick over the past about 3 to 4 months, and there was a sharp correction in the stock in the last about 4 to 5 trading sessions, and currently it's close to an important support level of about 1350 to almost about 1400 zone. So it looks like a good entry point for a company like CMC. That's it from all of us, friends. Have a great trading session and see you tomorrow at the same time.